Hello everyone, this is Tony LaPorta with simplerfutures.com. This is the free video for Payroll Friday, September the 2nd. I'm just going to show you what I look at when it comes to continuation charts and rollover gaps. And these rollover gaps have been getting filled for the last 30 plus years. So it's going to be something that we need to target. A weak number tomorrow. The bottom of this rollover gap is 171.10. A weak number tomorrow, and we should fill that no problem. What I look for with these rollover gaps is to look for the gap to be filled and then the market turn lower. What we've seen over the past few years is if this gap doesn't get filled tomorrow, then I look for a continued downside for a good week. And then we start looking for that slow grind higher to go fill that gap. So that's our gap level for tomorrow. Rollover gap 170.27 to 171.10. This 171.10 was the September Treasury bond low from Wednesday. So we have the same thing going on in the Treasury notes. This gap's a little bit bigger. It's all based on the coupon. And this gap is today's high, 131.02. Yesterday's low, 131.23. So there's our rollover gap. Like I've said here, that's a big rollover gap. Last quarter, it took 1 week and the Brexit news to fill the gap. I'm thinking this quarter it could be a bit more difficult. I know one last thing, and I'll show you how difficult these gaps were. This is the Euro bond. This was the gap. This was the gap from last quarter. This is Brexit. But this was the gap from last quarter, and it took literally the Brexit news to eventually fill that gap. We've got a new gap now, this big gap here. Will it take 3 months to fill it? Could this eventually just be a big island top and the market comes off from here? I don't know. I'm just going to take it one day at a time, and tomorrow is payroll. So I have a short credit market position via some puts going into the data tomorrow. So that's what I'm thinking. I hope that helps. This is Tony LaPorta with Simpler Futures signing off.